Hi everyone, welcome. So today's session we are going to be looking into something different from we are moving on from candlesticks. So we are going to be looking into support and resistance. But before we start, I just want to remind all of you that I'll be uploading this video on my YouTube channel, so you can go and check it anytime. If you are having any doubt or if you miss something, you always get the recorded video on my YouTube channel. And if you and when you go there, don't forget to subscribe so that you can always get notifications when I upload new videos. And this applies also to everyone who is going to be watching this video from YouTube. Don't forget to subscribe for more content, and I would greatly appreciate it if you just leave a like and a comment. Thank you very much for your support. So let's go straight to our today's business. So we're going to be looking in into support and resistance today. So it is always important to start by defining certain definitions, So today's topic is support and resistance. Resistance. All right, let's make this bold. Is it bold? I think it's bold now. Okay, yeah, perfect. So today's topic is support and resistance. So let's start by defining resistance. What is resistance, right? What is resistance in forex trading? So let me just give you a scenario first before I give you a definition. If you've looked on these charts, you realize that we have candlesticks that are moving, a series of candlesticks that are responsible for the market moving upwards, downwards, or sideways, right? So let's say we have a market that is going up, then it reaches a level where it changes its direction like this. We call this level resistance. So now how do we define resistance? So basically resistance is a price level responsible for changing direction that pushes the market to the downside. So we have the market pushing to the upside, right? Then there is price change at this price level. Then we see the market pushing to the downside. So this is what we call resistance, right? And let's say we have the market now pushing to the downside like this, and then it reaches a level where it changes its direction instead to push to the upside. We call this support, right? So this is our level of support. So how do we define support? Support, it is a price level responsible for changing direction that pushes the market to the upside. So we have price changing its direction here, then it pushes to the upside. This is support, right? So I want you to understand this concept very well, because it is going to help you in your trading journey or career, if I may say. Once you begin to have an appreciation of how price reacts when it gets to this point, you'll be able to answer our questions like what we defined in our first session, introduction to forex trading. We want to know where to take trades. So this is where we take trades, right? So as time progresses, we are going to, apart from this first session on support and resistance, we're going to do another. This is more like introduction, but it can also help people who have been trading for some time now. So I will do another session on how we can properly like trade using support and resistance. It will be more like a trading strategy using support and resistance. But the main purpose of this session is to make people understand what is support, what is resistance, and how do we use the concept of support and resistance to trade. How is it helpful to us, right? So yeah, this is it. I always believe that I have to write the definitions down for the sake of people who will be taking notes. So as we are trying to move to the next thing, let's just try to write a quick definition on support and resistance. So what are we saying? We are saying resistance. Resistance is the price level responsible. I say it is price level that is responsible for change in direction that pushes the market to the downside. The market to the downside. Right? So this is resistance. So let's just do something like this, right? Then let's define support. So it will be more or less same thing, but vice versa. So support, on the other hand, it is the price level or symbol change in direction that pushes the market to the upside, right? To the upside. So these are our definitions for support and resistance. If you want to write them down, you can write them down. It will definitely help you in your trading. Okay, so this is perfect. So we support and resistance, right? Now the question now is how do we use support and resistance, or what is the concept of support and resistance? This is something that is very important for us to understand as traders, because it will definitely gives us an edge each and every time when we are trading. Because remember, what is going to give us like confidence in our trading and advantage in our trading is having reasons on why we have to enter trades. And one of the most important questions to ask yourself is, where do you take trades? So this concept of support and resistance, right? It's a key concept that help us as traders to understand, to analyze, and to act on chart patterns in financial freedom. So we are going to be realizing that in a few sessions to come, we're going to be looking into chart patterns. And once you have an understanding of what is support and what is resistance in their major role in trading, you're going to see that it is really beneficial when you use this concept hand in hand with chart patterns, right? So now let's try to do some demonstrations on what really happens on these levels, support and resistance, right? Because there's something that is really going to help us, right? Let me just try to erase these drawings first. So I want you to be patient. if you have been with us since the first day, the first session, it's more like we are building a body. So we start by making a skeleton. Then after making a skeleton, we then put the flesh in. This is how we are going to design all this. Oh, it's like building. You start by laying a foundation. So what we are discussing right now, what we have discussed so far, it's more like building a foundation. So you realize that at this point where we are right now, if we are talking about build these concepts in terms of building, we are done with we are still on foundation, but at the same time moving to building the walls. At some point we're going to get to the window level, then the roof level. After we are done, we'll do the wiring of electricity, to the plumbing and stuff. Then we are good to go with our building. So just sit back, hold on, try to be patient. Then we'll get to a point where we would have an understanding of everything that we would have done, and to be comfortably say that you can now call yourself a trader. And when we get to that point, we don't expect people to lose money as I see most of the people doing. So patience is really one of the most important attributes in successful traders. So yeah, it is what it is. It is what it is. So now let's say we have the market, right, that is moving from this point. Then it makes a high and a low. Then it reaches a point where it makes a sharp turn like this. Then it pushes again to the downside. So if the market is going to be rejected from around this level, let's use a trend line. Let's say the market is going to be rejected, right? Let me just use let me just use the drawing too. Okay, I'm sorry about that. Let's say we have this price level where the market is being rejected, right? We say that this is a resistance, right? This is level of resistance because market is being forced to change its direction. Then it moves to the downside. Then if the market comes down again to this level that is responsible for this this movement that we would have seen pushing the market to the upside. When the market comes back again, it is pushed to the upside. So we'll continue to witness something like this. So each and every time the market approaches a certain price level, it is rejected, and then it is forced to change direction. We call these price level support and resistance. So in other words, we can try to think it this way. Support and resistance, they act more like memory, right? So each and every time the market approaches this level, let's say we have our level of resistance, right? So the next time the price approaches the level, we have memory that is still that, and the buyers are reminded that they have to be active around this level. There is money around this level, right? So they will take action. So in other words, what is going to happen, we're going to see the buyers, actually the sellers will be reminded that they have to take action around this level. So we are going to what you'll be witnessing around this level is that the buyers are going to start to lose control of the market. And why are they going to lose control of the market? Due to our memory, the sellers are reminded that they have power around this area. So they will start to have interest of the financial market around this area. So once they start to have interest around this area, they will then start to participate in their numbers, putting like to put large orders there, then they push the market to the downside. So as they put more orders and there are more orders around this area, the buyers will definitely lose their control over the market. Then the sellers will take control of the market, then they push the market to the downside. So the same principle applies when the market is approaching to the to our level of support, right? So what is going to happen? We're going to see the sellers lose momentum in the market, right? So as they are losing momentum, the buyers, due to the memory that is stored around this level, right? With memory that is stored around this level, these buyers are reminded that this is their area of power. So they will start to act in this market. They will start to feel to put more orders, right, in this market. Then as their interest is increasing, they are putting more orders. They will have enough power to push the market to the upside, right? So due to this, we will see the market bouncing on and off between these two price levels. So it will definitely come a time where the market will come in this level, will fail to hold this market. So what is going to happen is the market breaks this level, it has to come for a retest. Right. So before I continue with this concept, I just want to give you a brief introduction to another concept that is going to be beneficial to you to understand what is really happening. We'll be looking into this topic later on, but it is important for you to understand like the basic concept of what is happening there. So there is a concept of what we call market structure. Market structure is the simplest form of price movement in the market, and it is really important to understand this price movement because you'll be able to read and interpret how the market is going to behave, right? So the market structure says that if we have a market or a level that is broken, right, it has to be retested because market structure focuses on price levels. So after our next session, you're going to appreciate also that instead of having price levels around this around here, we'll be having zones or areas, right? So it focuses more on those levels in areas. So once a level or a zone is broken, it has to be retested. In other words, what you're trying to say, this level that has been acting as resistance is going to act as what is support. So the market will come forward for a retest. Let's say a retest, right? So when a retest, let me write it here. So this is retest. Don't mind my handwriting. So it comes for retest around this area, then it is rejected, then it pushes to the upside, right? So this area around here that has been acting as resistance is now acting as what is support. This is what market structure says. So the same concept is true. Let's say the market fails to hold let's say this level fails to hold the market around this area, we're going to see this level being broken, then it has to be retested. So once it is retested, we will see a level that has been acting as support now acting as what is resistance, right? So this is a retest. Let me just denote it as RT. So this is now a retest of this level. Then the market continue to push to the downside. So you might notice the market continue to push to the what, to the downside. So is it pushing to the upside? We, like I said earlier, price a level is broken, that is acting as what support, then it's retested, it now acts as what resistance. So the market continue to push down. Which brings me to the next thing that I just want you to understand. So this continuous movement of the market going down, making a series of these highs and lows, it's called a trending market. So a trending market, the market is going down or it's going up. And then there's also another type of market where we have the market bouncing on and off between definite points, like what I've just demonstrated here. Market bouncing on and off between this price level and this price level. This is called a what? A ranging market, right? Then we have also another type of market that is called consolidating market, or rather it is choppy. So there are no definite points where the market is being rejected. So to be making this noise, right? This is a choppy market. So we are not interested in this market. We are interested in this market where the market is trending. We might also be interested in this ranging market, but this is for people who have experience in the market. So if you want to have an edge, an advantage in the forex market, try to look into this trending market. Why? Because it is important for you to know where the market is going to go. Remember, we need to make a trading decision whether we're going to buy or we are going to sell the market. So in order for us to have that decision, we need to know the direction. So if the market is ranging, you don't know where it's going to go next. Is it going to go up or is it going to go down? So you wait for a break of structure. Then when it starts to make series of highs and lows going down or up, that's where you start to trade. So we always trade when where the market makes a pullback. So this movement where the market will be going for a retest in the previous level, we call that a pullback. So this is a pullback. So this is a pullback. So each and every time we see a retest, it's called a pullback. So yeah, this is the basic concept on support and resistance and how we can use the concept of market structure. We'll be looking into this after we do supply and demand. We will talk about this in more detail. So yeah, this is how support and resistance works, right? So now I want to give you another scenario that might help you when you are trading, right? Let's say we have our what do you call this? Let's say we have our pair, right? We are trading. Let's say right now we have what? We have V50S, V50. One is, or maybe we are having Nasdaq. Let's say we are having Nasdaq, right? This is our pair, V50S or Nasdaq. So we have time frames, right? We have the 1 hour, the 4 hour, the day one or whatever, right? So let's say we have 1 inch here, the 1 hour time frame, right? Then we have 15 minute time frame like this, right? So on our 1 hour time frame, you might notice that we have a market that is ranging, right? And one thing that I want to mention to you, when the market is ranging or consolidating, is building momentum or power. So once it breaks any of this zone, either to the upside or the downside, you're going to see sharp movements. So let's say it breaks to the downside, right? On a 1 hour time frame, you are going to notice something like this. Then the market will fall down like this, right? So as it is moving down like this, we had this level that has been holding price, right, in this level. So this is our resistance. This is our support, right? So if the market manages to break this level right here, we will see it trending or making this strong impulsive movement to the downside. But what is really happening in this market? Let's try to see this on a lower time frame. So this is our level right here, like so. So it is bouncing on and off between two price levels. So when it breaks this market, it comes for a retest of this level, then you see something like this, then it continues to push where to the downside. So here it's making a series of highs and lows. So it is let's say this was our support, this was our resistance. So and this is now what support. So this level that has been acting as support, it's now acting as resistance. Then it makes the market to push to the downside, and it breaks this level of support. It acts as resistance. It continues to do something like this until it is a point where it makes a U-turn. Then it starts to push to the upside. So on a lower time frame, we have the market that is showing us like what's really happening from our market structure. Then on our 1 hour time frame, we just have the market that's making a strong impulsive movement. So this is how you analyze. You start from a higher time frame, then you go to a lower time frame. So on a lower time frame now, this is where you take your trades because you want to see where there's a pullback. So we trade where there's a pullback, a retest. Always a retest. So the market is going down. So we're always looking to sell. We don't sell here. We sell where there's a retest, right? Then the other thing that I want you to remember is on a 1 hour time frame, you might see something like this also. The market coming all the way up, then it pushes down until this level. Right here, this is the ultimate level where it reaches. So this on a lower time frame, we have many levels that we can draw like this, like this, like this. But on a bigger time frame, always have something like this, like this. So where do we trade? Where do we trade? So it depends now. If you are a swing trader, or if you are a scalper or intraday trader, right? Swinger or intraday trader. So if you're an intraday trader, we want to trade where there's a pullback. But if you try to see this pullback right here on a bigger time frame or a retest of this bigger time frame, the pullback on a bigger time frame, this pullback, you can actually have an edge because this is more like a major support and resistance, right? Resistance and support, and these are minor support and resistance. So taking your trades from major support and resistance is always good, and it's going to give you an edge. Why? Because this is where the big boys are going to take their trade. The big institute, they are not going to waste their time trying to trade on a 1 minute time frame. They are definitely going to take their trades from bigger time frame, the 1 day time frame, the weekly time frame also. So you want to see these major support and resistance. So when you see the price approaching those levels from a lower time frame, you see how it is going to behave, right? So this is how you trade. So let me just try to explain the last thing before we call it a day. So one thing that you have to keep in mind, if you have a level of resistance, a level of support, we are answering our way question. And remember, I say that if you want to have an edge in the market, you need to have this way in the when aligning, the where and when. So where is the support? Where do we trade the support and resistance? When do we trade the candlesticks? Right? Remember momentum. So what you want to see the candlesticks losing momentum. I have explained that. If you haven't watched our video on that, please go on our YouTube channel. If you are watching this on YouTube already, please just go and try to see our the session on candlesticks, introduction to candlesticks. There is where I explain this in detail. So we want to see the candlestick losing momentum. So when we see candlesticks losing momentum, we then want to see our exhaustion candlestick, indecision candlesticks right here. Then we shoot our buys. So this is how you trade this. So let's just try to go to our live markets, right? So this is our live market, right? Let's just try to draw some few Okay, so we have this level right here. So these are resisting. So price came here, it was rejected, good trading area. We have another right here. We see some rejections, a lot of rejections there. So each and every time the market is going to come to this, then it is rejected. Then we have certain the same concept that I was trying to explain to you. We have market breaking this on. So if you move to a lower time frame, there will be a retest here. Or you can actually wait for the time. This is how a lot of people are going to lose money. They will think that the market is already going down, but then to come to a level where it's going to be rejected from I don't know which level right here, then it makes strong movement, then it comes back all the way down. So you just have to be patient in this game, right? Patience is the key. If you are not patient enough, you will not make money. You always make losses trading at places where you are not supposed to be, zones rather, in areas where you are not supposed to be trading. And timing is also important. So you want to see a retest of this. Either you move to a lower time frame or you wait for the market to come in. So you just have to be quick to make judgment. So how are you going to trade this? So this is how actually you trade this. So we can actually draw this as a level of what resistance. This one is level of resistance. So the next time the market is going to come to this level, expect it to be rejected. So this is how you trade this, right? You see this area was previously acting as what resistance, then it was broken, some noise around there, then it was broken, retested. So this area that has been acting is resisting is now acting as support, right? So this is how you trade. This session was mainly focusing on what is support and what is resistance. We will be doing more sessions on support and resistance and show you the perfect way of how to trade this. So thank you very much, guys, for your time. See you in our next session. I hope you're going to have a good day. Thank you.